In this episode of Smart Humans, we talk with Desai, the founder and CEO of Hiive, the secondaries marketplace which focuses on selling pre-IPO stock. We talk about the hottest companies that are currently private, the IPO roadmap, and what lies ahead for the economy and future IPOs.
Welcome to Smart Humans with Slava Rubin, presented by Vincent. In this alt investing podcast, Slava talks to amazing minds about their investment journey and finds out what it takes to make it in the markets. And now, here's your host and smart human, Slava Rubin.
Hello, and welcome to the latest episode of Smart Humans. I'm very excited for today's guest. We have an entrepreneur who will help you get liquidity into the secondary market, trying to get all those hot pre-IPO companies before they IPO. Desai is founder and CEO of Hiive. Welcome to the show.
Thank you very much, Slava. It's great to be here.
All right, so we always like to get started from the beginning, which is how did you even get into alternative investments? How did you end up landing at Hiive and starting it?
Well, the history is a long and sordid one, but I'll just say that I wanted to get into the world of private markets. Landed a job around the summer of 2008, coming from a legal background, and landed a job at a boutique kind of brokerage firm in the space. A week after I sort of fortuitously got that job, Lehman went bankrupt, and so it was quite a journey from there. But I spent the next 15 years, working in the what we call the secondary market for private equity, essentially, which is the secondary market versus the primary just means when you're doing a secondary trade, it is you're buying from an existing investor as opposed to investing directly with the company. So instead of giving cash to the company, you're giving cash to another investor who's selling you their stake. I started in funds, private equity funds, and then eventually, the opportunity to make markets in pre-IPO stock, sort of kind of exploded onto the scene in the mid 2010s after Facebook went public, and the rest is history.
Amazing. So you were at a company for 15 years after the 2008 crash?
Yeah. Do I have any cash, did you say?
No, after the 2008 crash, you were at one company for 15 years. Is that right?
Yeah. 14 to be exact, and then now been about 3 years working on Hiive, or 2 years. Yeah.
Amazing. So typically people that have that sort of loyalty, 14 years at one company, aren't always entrepreneurial. So how do you balance those two things? Why do you think you were so loyal at one place and then you have that entrepreneurial DNA as well?
Totally. So, I always, throughout the years, obviously had a great career in finance, and but always had this itch and always admired entrepreneurs. And I always knew that sort of one of the great challenges in life and in the professional world was to start your own business. And the world of startups, I was surrounded by the world of startups. It just seemed so exciting, and kind of there was a big opportunity. I felt there was a big opportunity right in front of me to create sort of a kind of a place where investors could access these private market investments more easily. And so jumped in and went after it.
Amazing. So clearly you're jumping in with your own personal net worth into the world of entrepreneurship. So you obviously have some stock there. Are you also investing into the pre-IPO, or what do you think of these different alternative assets that are out there, whether it's art or collectibles, crypto, real estate, private credit? What do you think about this versus public markets?
Yeah, for sure. So, believe it or not, I'm personally a pretty conservative investor. I've also actually put a lot of my means behind Hiive itself. So I'm quite heavily invested in Hiive. So you could say I'm very invested in startups, but I'm invested in Hiive. In terms of, and aside from that, I'm kind of spending a lot of my investments in the public market, things like diversified funds and whatnot. I have over the years done some real estate investing. Real estate is one of those asset classes that seems to always generate great kind of risk-adjusted returns over time and stable investment. And so, yeah, to the extent that I've been more of an alternatives investor, that's where it's been.
And when you've been doing real estate, is that just you finding an opportunity yourself or through a buddy, or are you going through one of the platforms through a managed fund, or how do you like to get into real estate?
Mostly more like residential real estate, do things like buying properties pre-construction, things like that. Did that for many years, not really active there too much anymore, but yeah, improving residential properties from time to time, and the like.
And when you're going into the diversified funds in the public markets, is that by vertical, or is that the QQQs or the S&Ps, or how do you like to invest into the public markets?
Yeah, typically through the large cap kind of ETFs. That's typically where I'm investing. Kind of plain Jane boring.
Well, plain Jane boring, but the big cap ETFs right now are probably doing pretty well since AI is giving a nice tailwind to all these mega caps, right?
Totally.
So, how do you think about crypto? It seems like you're pretty conservative. It seems like you might be anti-crypto. Is that correct, or do I have you pegged wrong?
I'm not anti-crypto. I do have a bit of crypto exposure myself. I'll say that it's one of these things where you kind of have to just say, look, it's to me from where I sit. I'm not a technical person. My CTO, who is like one of the smartest people I know, is actually very anti-crypto. But and so it's a tough thing when really brilliant people can disagree on whether there's even fundamental value in an asset class. But I think it's hard to ignore crypto these days. And my view is that I don't think it's unwise to have some exposure there, just given that it seems like the crypto as an asset class, while you don't know what is going to be necessarily a winner at this currency or that, or this platform or that, overall as an asset class, it does feel like it's here to stay.
And then what about the art or collectibles? Is that something that you're getting any exposure to? Is it more that you just go to a gallery every now and then and like to drink some wine?
I've dabbled a little bit in art, not necessarily the investment grade kind of stuff, but definitely I think art is really exciting asset class. I think probably people are going to want to really become educated in art. My understanding about investing in art, my very little understanding about investing in art is that you probably want to invest in sort of very established artists, and you probably don't want to think about art as an investment unless you're buying into something that's quite established as an artist and has a real kind of track record behind it.
I think it's funny. You said you were playing Jane, but then all of a sudden you scratch at this itch, and all of a sudden you have some real estate investments. You have the exposure to mega cap tech, and dabble a little bit in crypto and a tiny bit at art. I mean, I don't know. You all of a sudden sound like a diversified alt investor. So,
Yeah.
moving on to the market, what do you think? This is an open-ended question. Take it where you will. You have a great perspective with your data and exposure to Hiive. What do you think of the market? What do you think of the stock market, the economy, employment? Open-ended question. Obviously, you could talk about it for a long time. Take it wherever you like.
Yeah, for sure. I mean, look, if you talk about the world of startups that I'm in, and even the broader stock market, obviously we've seen a period of continuing sort of or a rebound in sort of the euphoria around in the stock market to some extent in the last year or so. It seems like a lot of that has been driven by the excitement around AI. I think in the sort of the elephant in the room is obviously continued really high cost of capital, and we see the impact of that in the market for startups that we operate sort of every day. That while the public market has really taken off, the world of startups is a story of kind of a lot of winners and losers. The big winners these days tend to be AI and to some extent crypto. has blockchain technologies have really kind of come back to some extent. But a lot of the other startups, someone used the term SaaS apocalypse the other day, which, because a lot of the SaaS startups are really struggling. I think generally speaking, in a higher cost of capital environment, the market might be back, but the cost of capital is still high, and that's still holding back a lot of venture-backed companies. And on our platform, we actually see a lot of venture-backed companies still trading at very material discounts to where they last raised, and valuations are still somewhat depressed because of these companies that don't generate huge revenues or material profitability. Are still struggling in this current environment.
It's interesting. A couple of years ago, or a few years ago, SaaS could do no wrong, right? So you're saying that those higher valuations are just harder to justify now, and they're having a little bit more challenge to raise more capital. I guess if they don't have the AI love or the AI halo.
Yeah, I think SaaS companies are suffering sort of like a triple whammy. First of all, some of the biggest customers of SaaS companies are other startups, and other startups have been hurting right now. So that's a headwind on growth for SaaS companies. Second, most SaaS companies, while they may be growing quickly and they may have material revenues, are often not profitable. I mean, there are companies from the ZERP era who are multi-billion-dollar companies who to this day are still burning cash, and that's just a no-no in today's high cost of funds environment. Who wants to, when you can earn 5% on cash, who wants to put money into something that's valued at 10 times revenue and burning cash? So that hurts. I think that there's also a lot of uncertainty around the impact of AI on the existing startup landscape. There's a lot of speculation that AI-driven startups are going to just displace a lot of the incumbents or disrupt them. Disrupt the disruptors. So I think that the SaaS space as an asset class has some headwinds, but that's not to say that there aren't some issuers in SaaS that are still doing well.
And you've mentioned the cost of capital a few times now, so that obviously it relates to the Fed and the Fed rate. What's your perspective on what's happening this year and then 25? The expectation at the moment is maybe one rate cut. That's kind of what the Fed has signaled, but some people are saying it's still going to be 0 or 2. What's Sim's point of view?
Yeah, I don't have too much of a perspective on that. It's one of these things that's pretty impossible to predict. Obviously, inflation seems to continue to be a little bit sticky, so I would not be surprised if that we continue to be negatively surprised by the Fed's inability to just cut rates quickly.
I guess, is that your way of saying that maybe it's going to stay high for a while?
Again, impossible to predict, but it wouldn't surprise me if we were higher for longer.
Sure. And this is a perfect opportunity to transition to Hiive, the platform. Obviously, you're doing great business. Many people know about it, but not every listener has heard of it. So can you just start by telling us what is Hiive, why did you start it, and who is it for?
Yeah, so Hiive is a marketplace for the trading of private securities, so companies that are not public. Specifically, it's venture-backed companies, and then in terms of the companies that are on the platform, generally speaking, these are companies that are valued, let's say, at least 400 or 500 million. At their last funding round. And the reason for having that kind of valuation threshold is you need to be of a certain size and have a certain number of investors before the company can really become tradable. So for a company to really be tradable on a platform like ours, there does need to be a good number of investors and typically and a high quality of investors. And typically that's what you're seeing with these higher valuation startups.
Great. So how does it work? So let's say I want to use it. So do I have to be accredited, or is it for retail? What's my minimum investment? Do I have to pick my own stocks? Can I get into a fund? Do you do it for me? How does it work?
Yeah, so you do have to be accredited to use Hive. The cool thing about Hive is it is actually self-serve. People can come on, sign up for Hive, and immediately start interacting with the marketplace themselves. They can buy stock directly. You need to be accredited to access the platforms. You have to be either an institutional investor or an accredited investor, and there's also a minimum investment threshold of 25,000 for a 25,000 US for a single investment. So there are some ways for more retail or smaller accredited investors to get access to the startup market. Those channels sometimes interface with Hive, but if you want to come on Hive directly, you pretty much have to be ready to make a minimum 25,000 US investment for a single company exposure.
And when you say the 400 or 500 million valuation minimum, but you go all the way up to massive, right? So I
Yeah.
believe SpaceX is plus minus 200 billion these days. They would be potentially on your platform. Is that right?
That's right. Yeah. So the companies that anywhere from that 500 million threshold all the way up to 100 billion plus are on the platform. Some of the most actively traded companies are those companies that are valued, let's say, in the 5 billion plus range. My colleague was telling me the other day that something like 70% of decacorns, which are companies that are valued at 10 billion plus, have traded on Hive already. So yeah, that's kind of where a lot of the action is in these really large cap companies.
That's awesome. 70% of the decacorns have traded on Hive. That's cool. How do the companies connect with you? Meaning, like, how is it that, Carta or Stripe or whoever it is ends up having their shareholders sell on Hive? Or how does that work?
Yeah, so because we are a registered broker dealer, we actually don't need to, get we don't need to have a formal arrangement with the company, what we call the issuer, in order to trade their stock. We can actually quote a market for their stock, and then buyers and sellers can come and match on our platform. So a lot of companies are just very passive in the process. They're not actively involved. We match a trade on the platform. The one thing that's unique about private market investing that your listeners should know is that when you agree to buy stock from a seller, that's not the end of the trade. At that point, we need to go to the what happens is we submit that potential transaction to the company for approval. So the bylaws of private companies, unlike public companies where the stock can just trade freely, the bylaws of private companies require the company itself or the company's board typically to approve the transaction before it can close. So the sequence of events is I'm an investor, I come to the platform, I see a stock I like, Rippling or Kraken or Cerebras or something like that, and I put a bid out for the stock. A seller accepts my bid. The platform then matches the transaction between the two parties, and the two parties basically sign effectively a trade confirmation or what we call a notice, share transfer notice. And the reason it's called a notice is because we take that document, which is like a letter of intent between the two parties, and we take that to the company to approve the transaction. So most of the time the companies approve the transaction, but there is a very significant percentage of companies who don't approve private market transactions. Even the companies who do allow trading, active trading in their stock, may reject a particular transaction for a reason. Maybe if they don't believe, they don't find the buyer attractive, or they're not interested in having that buyer on their cap table, or in their shareholder base. They could block it. But yeah, so that's the step. And then once the company approves the transaction, then you can close the transaction, and we manage that closing process for the buyer and seller as well.
Thank you for all of that background. You mentioned that sometimes the company might block a transaction. What are the main reasons that a company would block a transaction? I've heard of that before. So why would that happen?
So some companies, I would say probably 30 or 40% of these startups, these highly valued startups, have a policy where they they actually prohibit all what you might call open market trades or ad hoc trades on a platform like Hiive. And so those companies are blocking trades. We're generally not submitting to those companies once we know that they're not allowing transfers. So we may submit transfers, trades to those companies, and then they decide that they're not allowing trades, and then we don't continue to bring them trades. In terms of the other majority of companies, let's say 60 or 70% of companies who do allow active trading of their stock, most of the time they're actually allowing the trades to go through. There can be certain cases where they don't allow a trade. For example, the buyer is a foreign entity, from a foreign jurisdiction that's maybe not friendly to the U.S. And the company has concerns about security related risks or other types of risks around their information where they don't want that buyer to be on there, be a shareholder. Sometimes the company might say they may deem the transaction to be too small. They don't want to be adding a new investor to their cap table for a small transaction. So generally speaking, or for example, another case could be if they're concerned that the investor is either a competitor or is invested in competitors, and therefore they don't want to allow the trade. Some companies have policies around the nature of the seller. So some companies allow current employees to sell, but not former employees. Some allow former employees, but not current. There's a kind of a range of policies when it comes to sellers. Usually, companies want to see sellers at least have fully vested stock before they start selling something. But companies have a view on sort of when's the right time for a seller to be allowed to sell as well, and that view tends to differ quite a bit.
Sounds like quite the decision tree and workflow there. Awesome. So you said that you've been around for about 3 years. You've been working on it for 3 years. Do you have a sense for what are some of the metrics, high level, meaning like how many buyers, how many sellers, how much transaction volume, etc.?
Yeah, so we're growing really fast. We launched so we started building the platform in early 2021. We launched in 2022, May of 2022, with a beta launch, and things have been going kind of gangbusters ever since. We've now reached the point where we are doing about 100 million in closed transaction volume every month. In 2024, we should exceed 1 billion. We should well exceed 1 billion in transaction volume. So yeah, we're very pleased with the rate of growth of the marketplace. It's growing at 200 or 300% right now.
That's incredible. And then how does fees work? Is that from the seller side, the buyer side, both? What are the fees? How does that work?
Yeah, so the only fee that you pay on Hiive is a commission. It's usually paid by the seller, and the seller pays at the conclusion of the transaction. So once the transaction closes, we get paid, and the seller gets their net proceeds on the transaction. And then so they're the only party that typically pays on our transactions. We also have programs where if a company's actually working formally with us on what we call a kind of a managed market program where we're actually engaged by the company to manage their market, we reduce fees for the company. Still doesn't pay us anything in that context, but we reduce fees for sellers of that company by 50% in that context of a more kind of active arrangement with the company. Our fee also includes the entire transaction completion process, including transaction settlement. So it's all inclusive.
So if it's not discounted, what's the normal fee for the seller side?
Depending on the size of the transaction, it's going to range anywhere from as low as 1% for a very large transaction, let's say in the tens of millions, all the way up to 5% for a transaction that's as small as 50,000 or 100,000, and then there's also an admin fee on top of that of $3,000.
Got it. Okay, great. So you obviously have incredible visibility into all these trades, saying that you have over $100 million a month now. Where are the trends right now?
Yeah, so as I mentioned before, a lot of the excitement that we're seeing is clearly in the AI space. Within AI, you have the LLMs, the large language model companies. A couple examples of companies that are private in that space today would be names like Anthropic and OpenAI. You also have chip makers, so names that are private right now in the chip space. Well, obviously everyone knows that NVIDIA is a chip maker, but names that are private in the chip space would include, Cerebras Systems, which is incredibly hot stock that has risen something like 400 or 500% over the last year. You've got another name called Grok. So these are a couple of AI chip upstarts that are really hot. You also see, so any company that sort of is sort of building the infrastructure of AI is either on the hardware side or the software side is going to be pretty hot. You've got, as I mentioned, also the blockchain technologies companies have been very strong. Names like Ripple, Chainalysis, Kraken, and others in the blockchain space have been doing really well. Generally speaking, what tends to make a company very hot or desirable in our marketplace is are they in a space that's really hyped up at the moment, like those two spaces I mentioned, but also is there some expectation or anticipation of an IPO, because people want to get in pre-IPO. The private market is illiquid. That means valuations are a bit lower compared to once the company goes public. Everyone's chasing that kind of IPO, post-IPO pop. So that tends to be another driver of interest in companies.
So are most people, when they're getting into these, let's say Cerebras, are they getting into Cerebras because they want to trade it on a higher price a month from now or a year from now? Or are they looking to buy it, like you said, in advance of the IPO and then just ride it into the public markets up to 3 trillion like NVIDIA?
Yeah, so we don't encourage people to buy in order to trade, like in order to sort of flip or resell in a short period of time. It's not the intention of kind of U.S. securities laws for people to sort of be trading. Companies also don't like that, so companies are not going to be viewed that favorably. Also, under U.S. securities laws, you generally have to hold, depending, there's a lot of minutia in this, but generally speaking, you actually have to hold the stock for 6 months before you can sell it. So people who are getting in pre-IPO, generally speaking, are anticipating holding at least until the company goes public and it gets through its lockup period. Now, that's not to say that people won't resell before the company goes public. It does happen. Some companies, a company may be 8 years old, a highly valued multi-billion-dollar company, and not be planning on going public for many more years. And so in that context, it's quite conceivable that somebody could resell their stock after, let's say, a couple of years.
And you mentioned the hot companies, the Anthropics, OpenAI, Cerebras, Groks, etc. They might not be the ones that are going to IPO tomorrow, right? They're
Yep.
just kind of hot. Do you have a sense of, based on the action, what the IPO roadmap looks like? I'm not saying that you can predict it,
Yep.
but obviously people were getting excited about Reddit as more action was going there, and then Reddit IPO'd, et cetera, et cetera. It feels like maybe Databricks is one of those, but you're the expert. So
Yep.
what feels like the roadmap for IPOs in the next 12 months?
So, there's a number of companies that have mentioned intentions to go public. I think that, getting back to this conversation about rates and whatnot, right now it's really about the public market and its sort of appetite for IPOs of these startups. The public market is looking for profitability. The public market has limited appetite for smaller companies that don't generate profits. But I think that as rates come down, we should see a significant uptake in IPOs, and there's a number of companies that have mentioned an intention to go public, or are either rumored to be going public in the next year to 2 years, or have actually announced plans to go public in the coming year to 2 years. And that's where you'll obviously see a lot of attention in our market.
Can you name a few of those?
Yeah, so some examples of companies that have announced. We talked about Cerebras before. That is, they've mentioned publicly an interest in going public. Klarna, Neo4j, a couple companies in Europe. Circle, another company that's in the blockchain space. Service Titan, which is a SaaS company or SaaS, quasi SaaS marketplace, services marketplace type business. So maybe not quite SaaS. And some others. So those are some names that have kind of openly announced. Some of the names that are kind of rumored to be going public. Cohesity, another name in the crypto blockchain space. Data Miner, Liquid Death, which is which is actually a joint company, and then Huntress. So these are just some examples of names that people are more actively pursuing in our market because of expectations around an IPO.
And are all of these companies that you just mentioned, these 8, 10 companies, do you have sellers as well?
Generally speaking, there are, I can't say for sure on every single one of those names, but by and large, there are both sides of the market on the platform for these names. So, these companies are trading better. What happens when there's a lot of interest in a company is the price gets bid up, and so that attracts sellers. So hot companies definitely are going to have sellers because they're interested by the stronger market price.
Amazing. I love all the details on the specific companies. Obviously, you live and breathe this stuff. So right now, today, you mentioned I would have to go pick my company. So Cohesity, Cerebras, etc. Do you have a vision or any expectation to try to call it a basket or an index of pre-IPO companies that I can maybe give you 100 grand and you just give me a basket so I could get diversification?
Yeah, so we actually have something very exciting coming up on that front. This is kind of the first sort of public mention of this, so a little exclusive for you. We are about to launch the first directly derived private market index. So we're creating an index of 50 securities called the Hiive 50. These are the 50 most actively traded unicorns in the private market, and we're going to create. It's an equal weight index. So basically, what we're going to do is we're going to take the top 50 companies, 50 most liquid companies, weight them equally, and then set an index value and have that, watch that index value appreciate over time or change over time. That we're calling it the first directly derived index because the index values, the input values in the index come directly from trading day activity on our platform. So no other inputs, no public market inputs, no algorithms beyond simply taking an average of the 50 most liquid securities on the platform. So that's the first step, and then that's launching in about 2 weeks from now, or 2 weeks from the date of this recording. But that is the first step in getting towards what that future state of what you're talking about, which is like diversified funds. We do believe that in the long run, there will be opportunities for investors to get diversified funds, and it's something that we'll probably work on in the next couple of years. I think that the trend, especially for smaller individual investors, is going to be towards getting access to this asset class through funds, whether that's purely a private fund created by Hiive or other providers, or it's some other way of accessing through the public market, right? Some closed-ended listed fund that holds private stock. I think that the trend is going to be towards smaller investors accessing the private market that way, because the companies are not keen on having sort of thousands of individual investors directly holding stock.
Amazing. So I love getting a scoop, an exclusive scoop nevertheless. So the Hiive 50, just to clarify, is an index where it's equally weighted It's not something I'm able to invest into, but it's showing me how the Hiive 50 are performing week by week, month by month. Is that right?
That's right. So it's going to be a barometer of the market. It's meant to be, a very high quality barometer of the market. It's going to tell you how the market as a whole is moving from day to day. We're actually, I think it updates hourly based on live trading data. So it's gonna tell you where the market's going, and then it's going to give you opportunities, for example, then to start comparing the performance of an individual stock with the performance of the market as a whole. Start thinking about things like market timing and so on. How well has the market done in the last 2 years? Is it now a good time to sell because the market's up, or is it not a good time to sell because the market's down? These types of things are gonna the Hiive 50 is gonna help to guide these types of decisions.
You're creating like your own S&P 500, right? So you're gonna have to eventually trade in and new stocks are gonna come in and out, and just that's gonna promote them.
Yeah, so it'll be interesting to see the phenomenon. Like I say that one thing I like to say to naysayers around the private market is that liquidity begets liquidity, which means that when things are liquid, that attracts even more liquidity. And I think that the 50 top stocks in the market are going to be the 50 most liquid stocks. Investors like things that are liquid. And so I think that you're probably going to see a phenomenon of the rich getting richer, so to speak, in the sense that you'll probably see investors flock to these 50 top securities.
Super interesting. All right, changing gears here. A lot of us want to be as smart as Sim, and we want to know what you're reading, what you're watching, what you're listening to. So, what is it that you can share that makes you you? What do you like to do on a daily, weekly, monthly basis that you're reading, watching, or listening to?
Yeah, look, honestly, I don't read too many books these days, but I will say, I wish I had time for more reading. But I will say that, investors who want to be in the know and be thinking about like having their own thesis for private market investing, especially, should be following some of the top media sources for news on the private market. So, for example, The Information is a great source of news around startups. TechCrunch, the New York Times has, and Wall Street Journal both have pretty active tech reporting. If you want to get into tech reporting, be on top of the latest expected IPOs, rumored IPOs, all that kind of stuff. Highly recommend checking out those types of media sources to be super informed, and then you can go and action those insights on a place like Hiive.
I love it. And the last question, which we always ask, is what's one prediction of one investment that you would be looking at today that 3 years from now you think would be doing well? The more specific it could be, the better. And we prefer alternative assets, but it could be a public market investment. So we'd love to hear what you think.
Yeah, I mean, look, again, like I said, I'm pretty agnostic around investing, but I will say that if you look at, the companies that it seems like the market is anticipating rising over the next year. If you look at our platform, there'd be names like OpenAI, Databricks, Cerebras, SpaceX, Kraken, Ripple, uh, XAI, ThoughtSpot, Anthropic. I mean, these are the names that investors are flocking to right now. So if I was going to say like, I'm trying to find an investment that is going to do well in the coming years, I'd probably be looking at those types of names and really look at the most actively traded stocks on a platform like Hiive, and those are the ones where you can imagine other investors are looking for them and help to guide the way.
I love it. We asked for one, you gave us six. More data to work with. All right, Sam, it's been a great conversation. We covered a lot from the market crash of 2008, you working for 14 years at one place and then decided to become an entrepreneur. You say you're really conservative, but you dabble across a bunch of different assets. You were talking about how AI is driving a lot of the inflation into the prices right now. There's been a little bit of a SaaS apocalypse, which you were the first person to tell me that one. I like that. Hiive's been around now and growing really rapidly. For any company that has over $400 or $500 million of valuation, you do need to be accredited and invest over $25,000. But if you're a decacorn, over 70% of you have already been using Hiive, which is incredible. $100 million a month in transaction volumes. You're going to probably cross $1 billion this year, which is huge. You told us some of the big names that people are looking at, whether it's the Anthropics, the OpenAIs, the Cerebras, the Groks, the Ripples, the Krakens, etc. And the IPOs, there's a huge roadmap. So people will just have to listen to hear all those names. We even got a scoop with the Hiive 50, the equal weighted index. I'm super excited about it. Liquidity begets liquidity, which is a great quote, and gave us lots of information, lots of predictions for the future. Thank you, Sim.
Absolutely. Thanks for having me.
Smart Humans with Slava Rubin is a podcast brought to you by the team at Vincent. Any data, text, or other content in this podcast is provided as general market information and not as investment advice. Past performance is not necessarily an indicator of future results. For more information on alternative investing, check out Vincent at www.withvincent.com.